this week's real estate and mortgage rate update. Stay tuned because I've got some updates on inventory, and it could be good news. Depends on how you look at it. So the national average 30-year fixed rate 6.88. This is as of today. So a little bit of a turnaround from late last week. We've seen a little bit of improvement today. 30-year FHA 6.28. So when we look into what's going on, again, as I've mentioned in past updates, up and green is good for rates, red and down is bad for rates. Each of these days represents a day of trading. Mortgages are based on a bond called a mortgage-backed security. They trade every single day during trading hours, just like stocks do. So imagine, if on this particular day there's, not much movement, and you go to buy stock and you ask how much, you go to Edward Jones, you ask how much Apple stock is, they're going to let you know the price. If you ran across the street to Charles Schwab, they're going to give you the same price because they don't set the price, the market does. But if you asked Edward Jones here and then waited a day or 2 days, you're going to have dramatically different pricing. Mortgage rates operate in the same way. Really, the key thing to point out here is mortgage rates don't go up or down unless this does. We saw this again inverse. Mortgage rates were going up Wednesday, Thursday, Friday of last week. We bounced a little bit. Now, what's interesting here is you start to, in the absence of economic releases, anything that's like market moving, you'll tend to, these bonds will tend to trade within these technical factors. So you can see that this is like a floor of support. It tried to break through on Monday. It was rejected back to this floor. And then today it went from this floor, came all the way up, tried to break through this ceiling and came all the way up to this one, but was rejected back down here. So what's likely to happen in the absence of any, market moving economic reports like employment, inflation, things like that, we're probably going to have a tight trading range here. And again, as I've mentioned in past updates, we're going to continue to see this choppiness through this year as the market starts to digest what's going to help with regard to deregulation, energy cost improvement versus tariffs, the unknown. So jumping into the supply side of things, there was some good news. However, I want to temper this a little bit in that active listings, inventory that's available to purchase, were up 30% year over year, April 2025 from April 2024. However, which in and of itself is great news. However, when we look back to a more normalized period of inventory, pre-pandemic, back in 2019, right in this range here, we're down 16% from that point in time. So still not normalized from where we had been pre-pandemic. And then to add to that, the population has increased 12 million people from 2019 to today. So that's, again, increasing a couple of these factors that are driving real estate prices up because we have a lack of supply. So the supply side is still low relative to demand, and that's creating upward price pressure. So Case-Shiller continues to forecast fairly strong appreciation. Most recent report is showing 5% for this year. So imagine, if you're buying a $500,000 house in 1 year, either you're going to have gained $25,000 in appreciation, or that $500,000 house is going to be $25,000 more expensive to buy. What you see here, this is Multnomah County median home price, this 550 number, but the reason, again, the supply and demand gap is what's keeping this up price pressure on real estate. So you've got 82,000 renters that can afford to buy in Multnomah County, and only 2,500 homes being built. So there's just a massive supply and demand gap, and that's going to continue to create upward movement in real estate pricing. It's going to continue to be strong. If you have any questions, feel free to reach out. Otherwise, we'll see you next week. Thanks so much.